More today on my walk here about trading a busy market, which is the topic of the last one. We are sitting right now, for people who listen to this later, the weekend, Sunday coming into Monday, where we had the headline about the 90-day tariff pause, a huge rally, and the next day it was down, giving a lot of it back. And then it kind of came back a little bit on Friday, and now it sits there around 5,400 in the S&Ps. So that's where we're at for context. Okay, so a couple things. I don't trade short-term futures as much, but I'm trading them almost exclusively right now, which is always the case when it gets really busy or there's a Federal Reserve Day. So I've said this before, but as you do this a long time, you develop different strategies. And sometimes you learn to, well, not sometimes, but as much as you can, you try to learn to turn on the right one at the right time. And that's different than jumping around and just being frustrated and going from one thing to the next versus knowing like knowing when to be have one hat on versus another hat on. Think about someone allocating money like a capital allocator or something. And it's like, I need to be going into real estate over this couple of years, and now's the time to buy China. And same thing with this with your strategies. Once you develop more strategies, you realize like what kind of market we're in, and the faster you can tune into that, the better you'll do because um, the guy from Pradeep, I think that's how you say his name, from Stockbee, he used to talk about um, go to Barcelona if you want to learn how to pickpocket because there's the most pickpockets per person or whatever the stat is. And then the other one is, the average fisherman can do great in a pond or a lake that's full of, for the fish are biting, right? But then an expert fisherman's not going to do very well when they don't know where the fish are biting. It's the same thing with this. So your strategy and your ability as a CEO, all that stuff, a lot of it is not over the really long term, but a lot of it in the medium and short term is about where you're applying it. You're doing the right thing at the right time, which is why I'm doing less swing trading right now and more short-term trading because huge moves, why take the risk overnight? I actually went home long some stuff this weekend, but generally speaking, um, that's just kind of how I do it. And I've learned that that works better. So the other couple other big things I picked up that I want to pass on. First one is cut your positions down drastically. Not only, we'll talk about size in a second, but I don't mean cut size right now. I mean for the amount of positions. So say you're swing trading, you like to have like, I don't know, five, six, seven, eight, 10 stocks. It gets to be a lot when you have 10, but consider trading indexes, leverage indexes, or even futures, minis, whatever you got to do, micros, whatever you got to do, and keep those positions down because it's kind of a risk on, risk off environment where if the S&Ps and NASDAQ are not up, you're not going to be up. So you might as well just trade those and save yourself. Because if unless you're a long-term investor, we're not really in a stock picking market when this is going on. We're in like an all or nothing market. So just trade the index and make it easy. Stop screwing around with managing like five stock positions. It's not worth the time and energy. I have screwed this up so many times. So hopefully that's useful to somebody out there. I know a lot of you just are trading the index anyway, but if you're not. Second thing is I was talking to Brent. Because we talk a lot when it's busy on the phone and just go through scenarios. And one of them on Friday was we were I was getting texts from friends about how like, oh my God, look at the bond market. It's so bad right now. What are they going to do? The bonds are out of control. And I'm not doubting any of that. It's probably true. Looks like it's true. However, in the short term, that negativity got pretty extreme because there was like four down days in a row for the bonds. Equities tried to go down in the morning and they couldn't do it. And it set off a short covering rally, which is a trade that I love because I know what everyone, whenever there's a lot of eyeballs on something, when everyone's watching something, whenever that happens, you have to be aware of fake outs and over analysis and people being stuck because it's not like it's fresh anymore. It's not fresh news. The first few days it was fresh news. Now it's not. It's old stale news now. So that's one thing. So I like that kind of setup right there. And you don't get that as much when the market's slower. So that's why I love short-term trading on busy markets. But the biggest takeaway from this podcast I want to hammer through is um, I told Brent I call it. He's like, "What are you doing?" I said, "I'm doing video game trading." He's like, "What do you mean video game trading?" It's something I learned in 2008 where when it gets really busy and the VIX is 30, 40, 50, 60, it goes up to 90, I think in '08 or something. When that happens, I am religiously using stops in the book all the time to protect myself from headlines. I'm going to get hurt on slippage. I'm going to take a lot of like little licks. But what I like to do is I start really small in the morning. So maybe like, I don't know, 20% of the size I want to trade. And I just when I like an area, I try it a few times. I add to it when it starts to work, and then I just stop myself out incrementally with stop markets. And I enter and exit with stop markets. And it's very sloppy, pay a lot of commissions. And however, the way I trade is I'm looking for big moves during the day, like 20, 30, 40, 50 handle moves. So a lot of times I'm playing around with those edges. And since I'm trading so small, the losses, while they can be painful, paper cuts, they don't blow me out. And because it's almost like there's 5 to 10 mini days within one day. And you guys have all seen this. So you'll have a great day like 5 different times and give it back and do it again and feel stupid and feel great all in the same day, right? So if you're doing this smaller trading where you're really just playing it like a video game and you're moving around on the edges, and this might not be for everybody, but this is what I do when it's really busy. So so I'm not committing too big ever. So I don't ever get stuck holding because it's easy to get stuck with a big loser and not click out when I'm moving to sweeping and moving so fast. So I like to have the stops in the book. And the losses are tolerable then. So the worst thing to do is you don't want to tap out in the first 2 or 3 hours of the day when it's this busy because there could be an amazing opportunity in the last couple hours of the day. So by doing this, I have found that what ends up happening a lot of times is my losing days don't take me out. I stay in the game, and then I can usually have something good happen later. And vice versa, you're probably asking, well, how do you ever get your size up and take advantage? I find that when I do this, I magically end up with sometimes bigger size than I ever thought on later on in the day when something adds up. And the way that happens is I'm playing small. I think I see something. I get stopped out. It goes without me. Then there's like a secondary move, and I get in, and it starts to work. It almost stops me out again, and all of a sudden, like some things are happening. I'm like, I think I got this. I start trading a little bigger. I add to it, and then it just takes off. And then it kind of just keeps going. And I add to it again, and I'm in this big trade that I didn't really try to hit too hard, but I ended up being in it a lot bigger. And that's been kind of the way of it for me when it's busy. This is not how I trade as much when it's slow because there's just not as much to do. But I don't use stop markets all day when it's slow. It's not necessary. I just click out or I have a passive stop and it's not that big of a deal. So just some different ideas to play with it when you're doing this. But if you stay really small, it just mentally and psychologically keeps you alive during the day. You just don't want to blow out in the first hour, which is so easy to do when it's just busy. I learned that when I was doing the prop trading about how you just got to manage yourself to stay in the day. So you never know what they're going to give you later on. I don't know if next week will be as wild that way as the last like 5 to 7 days have been, but so that's those are the things really is keep stops in the book, trade really small, and don't worry about going bigger. You'll just become bigger when you need to be if you have experience with the stuff. If you don't, then you're just learning. Like it's your first busy market, then you are gonna understand what that's like and see how it's very different than a normal market. Once the normal market comes back, and there are certain sectors that are doing well and some that aren't, and China's doing well and banks are doing bad and oil's doing when all that's happening, then I'm going back to like my swing trading and using those price baskets I made, and I'm going back to that kind of style because that works well for me in that environment. So it's different. And another thing I do too is I'm picking up some longer term stocks with a friend who's good at analyzing that kind of thing with we're kind of working together on that, and I'll pick up some stuff very small and build into some longer term positions that are intended to be held for a couple of years. Some of those positions I'm entering now are China related, so I think that might be poised to do well, but that's not really even trading. That's just something different I'm working on. So it's a different account, it's smaller, and that's how I'm approaching it. So it's it's weird because I just used to short-term trade only, and then I've broken into these other things now, but I think this medium term swing trading, which is not what I've been doing recently, right? Because it's busy, but that's going to be my go-to going forward. I think that that's going to be, and eventually the longer term stuff will probably overtake it, but that's the area that I'm really excited about and wanting to build out and trade bigger and grow in. And I view this short-term stuff as more of a specialty trade for me now. And it's because of the stress of it. It's very stressful. But it's fun when it's busy. I just don't think it's as sustainable as it used to be. It's not as easy. You can't feel the books as much. But when it's this busy, it still is productive, I think, to keep your time frame inside of a day. And when I do hold, so I held some stuff overnight. So just to give you an idea, I'm holding because people don't talk about this usually. They say they do things, but you never know like how big are you doing it. Like I'm holding stuff overnight. Like if I got a good trade on Friday, I hit, and I probably took off like 85 to 85%. 90% of it I took off. 90% probably. And I kept down like 10% in futures overnight. So I'm long from a nice spot on Friday and I have a stop kind of like a little bit below where I entered. And I'm willing to give that room money back on that size in looking for like maybe something like a couple hundred handles higher still, 5,600 maybe. And just seeing how it plays out changes each day. And that's how I handle that. So I don't do that a lot, but I'm not I'm not risking everything I made during the day because I feel like shit if I give back all the money I made during the day. I already had multiple days last week where I had some really good days going. I gave them back and ended up small, very frustrated. So Friday I had a good day and I just kept it. And then I, kept some overnight, but made sure that here's another concept that really has been big for me is going for swing trading as well as for every kind of trading. You have to think about how am I actually going to feel emotionally when this comes back? Because it's easy to say when you're doing well, like, oh, yeah, I'll buy more when it comes back down to 57s and it's trading like 80s. And then it starts coming down there. Maybe you buy a little and it starts to leak. And now you have a bigger position on and you're terrified. Like you want to dive out of everything. And the idea is not even broken, but you've broken yourself. And it's so important you have to think ahead. And I think that's why selling is so hard. Being a good seller is an art form. And it's harder to hold on to that money than it is to make it sometimes because you can find those good spots and execution. But man, is it hard to keep it. And you feel like you scale out too early, you feel stupid when it keeps going. And then it's hard to figure out when to exit it because you're always exiting the puke, and then it goes back up again. And so what I've done on that too is sometimes just a simple short-term moving average crossover on a big thing. I'll just have to get out and reassess. Or I'll have to say, hey, if it goes below this level, I think it's broken. And and I'm also piecing out into strength always on these days. You have to. And you can always rebuy. I don't mind rebuying, I don't mind buying higher. I have no problem with buying something higher if it's working or selling it lower, but I don't want to be not taking anything off and watching psychologically watching things evaporate on me. So there are specialty days, certain days like Fed days or things where I feel like everyone's stuck and something changed and we're just not coming back today. And that's just me having a lot of experience to identify those days. Sometimes I'm wrong, but sometimes I'm right and I'll hold a bigger trade and I won't get out. But everything's just tree creaking on me here. Jeez. Everything is just everything's a nuanced situation. It's all different. And I think there's like these podcasts, they follow common threads, but everyone wants like a nice simple, box to fit it into. And it's just not like that. Like no person is like that, and this is not like that either. So you just like general principles. Like you build something to help you get out when you're wrong. Figure out. I love entering. Like here's another thing. Say I want to buy. I like to look at like, okay, where am I going to puke? If I'm going to buy it right here, where would I puke? And then I like to buy it there. And if you trade really small, you can buy it there. If you trade big, it's hard to buy it there because it's like, ooh, it seems like it's broken. Even though in theory it could be, if you're right, it could be a lower risk spot. But it's tough to do that to kind of fade the short term momentum in the name of the medium term game that you're playing. But oftentimes I'll enter it really small. I can do that with like 15% of my size or something. And then if it starts to work and gets real noisy and firms up and gets narrow, I'll add my other ones on. Then when it breaks the highs, I'll add the other ones on. And then maybe I got to cut the ones that I added at the high. And then I'm in the other two packages. And maybe it goes up again. I add those back. And that's how I play it when it's busy. That's what I'm doing. That's not for everybody, but I'm just shining some light on it because it works well for me. And it doesn't work as well to put on my size, camp at a level, you could, but that's not, and then just cross your arms and say, I'm in here and I'm out here. That's fine if that's your temperament or what you want to do. But I like to kind of flow with it a little bit more and feel it out. With the longer term stuff, I do the opposite. I put the order in and that's it. So it's a different kind of trading. So, anyways, hopefully those tidbits can be useful to somebody. Good luck in there.